Welcome back. We're here to give you a foreign investor perspective. We have with us on Closing Bell a special guest this afternoon, Shiv Puri, founder and managing director of TVF Capital Advisors. He joins us on the sidelines at the Kotak Global Investor Conference, where he's been meeting with a bunch of companies. Shiv, good afternoon. Thank you very much for joining us. I know you have several $100 million invested in India. So I'm going to start first by asking you what you make of the earnings season that is, currently underway. It's been very disappointing on a bunch of different fronts. What's your assessment of how corporate India is doing?
Yeah, I think by and large, a big swath of corporate India has yet to see the benefits, let's say, of the improved macro conditions. Whether that's the political change, the work that's happening within the government, the fall in oil prices, which is a significant benefit. I think all of these will come with a lag, but as of now we are yet to see some of this translate into actual numbers and earnings. And I think one of the things that came out of this conference is in order to get that piece going, it's going to be very difficult for it to come from the consumer side of the economy like it did in the 2009 to 11 phase. It has to come from investments, and within investment I think it's going to have to be spearheaded by the government in some way, shape or form.
So doesn't that put the government doesn't that put the government in a bit of a bind? Because at one level you have people, investors like you, who talk about the sanctity of the fiscal deficit, and we'll be looking at that number very, very closely, and yet we're expecting them now to lead or pump prime the investment cycle.
Yeah, I have two comments to that. I think the first is that fiscal deficit is important in the context of growth. If the growth is low, as is the environment that we came off, then you have to control the expense line, and the fiscal deficit number must be maintained. But in order, if growth is picking up, there is some flexibility on the fiscal deficit side. The second point I'd make is that not all of this has to come from the government's balance sheet. I mean, if you look at some of the PSU companies, whether it's the Coal Indias or the NHPCs or even NHAI, National Highway Authority of India, they're sitting on a lot of capital, and it would be great to see that being deployed on the infrastructure side to sort of kickstart the cycle. There is something that needs to ignite, and I think that's the best place for it to start.
Shiv, it's interesting. You're part of a growing chorus now that's putting, if I may say so, fiscal responsibility second to kickstarting the investment cycle in a fashion where public spending leads private spending, or the return of private spending, so to speak. And I think the bit that you're talking about, we're getting PSUs to put the cash on their balance sheets to work, is also a growing chorus at this point in time. What kind of infrastructure funding structure would you like to see in this budget, sans which you might be a little bit disappointed by lack of vision in the government?
Well, I think the government over the last 9 months has, from all our work, has been doing the right things. They are focusing on the right areas. They're putting the right systems and processes in place. And I think anybody you talk to in the sector will agree that there is a lot of work that is being done in the background, and that they expect this to improve in some period of time. I think that in terms of the budget, there has to be really, I think, two key areas that should be of focus. One is on the infrastructure side. Now, whether that's only through taxation or whether that's through certain benefits or exemptions, that's something that they would have to figure out. But whether it's in road development, which is something that we can start fairly quickly, or on the infrastructure, other areas of infrastructure, that's one area I think that they should focus on. And the other is what the government's talked about, which is Make in India. Well, I think we should have some clarity on make what in India. We certainly don't have the same level of advantage, so to speak, as maybe China in mass-scale production of pretty much any good. It's much cheaper to do it there, even after we import and bring it out here. So it's hard for an entrepreneur to sort of say, I'm going to make this, just to maybe create jobs. He's going to want to look at a return. Having said that, I think we have in India a lot of strengths in terms of the technology capability of people, and we should use that and see in what areas that can be applied, whether it's in production of industrial equipment or defense, certain medical equipment, just things where we feel as a country we have the strengths, and address those in the budget so we incentivize people to invest there.
All right, Shiv, if I may come back to your view on the markets, given the fact that you're fairly disappointed with earnings season, I'm guessing that you're quite comfortable with the correction we've seen, Nifty. Markets now finally sort of catching their breath and the economy catching up with markets?
Yeah, I think this is very healthy. In fact, I think if the markets don't do something like this, there is cause for concern. If the market has regular corrections along the way, I think it's very healthy. It keeps people in check. It keeps reality in check. And as many people have said, that this is a marathon, and we have to treat it that way, not only for the economic recovery in the country, but even for the stock market.
Where do you expect markets to go from here on? Do you expect, the budget to be a game changer? Do you expect that by the end of the year, the Nifty will be way above 9,000? Or do you think this will be a year where we'll wait for the economy to catch up with markets?
Yeah, I think the latter. It's very hard to put a number on a 9-month or a 1-year perspective even. But I think that for the economy needs to pick up there. I'm more interested in some of the steps that the government has taken, what the results of those would be, what the action of is happening on the infrastructure side, what is happening in terms of project announcements, where work is actually starting, and once that part of the economy picks up, I think things after that will follow. So I'm much more focused on that than even a 1-year target or anything big bang in the budget.
What does that mean for your investment strategy in 2015? Some of the stocks I know that TVF has been associated with are stocks like Hero or Pidilite or Bosch. What looks good to you in 2015?
Well, without talking about any specific stocks, I think the areas that still look good for this year would be financial services. We've always felt that is one of the best ways to play the capex cycle, the consumer cycle in India. I feel that areas like even housing finance, even though there has been some movement in some of those companies, there is a very long-term secular opportunity where maybe the longevity of that growth is probably not fully appreciated. Healthcare is a segment of the economy that reminds us of where IT services was maybe 12 or 15 years ago. That IT services sector took a good 8-10 years before India took off, and I think healthcare is like that, where
so how would you play healthcare?
Healthcare companies.
How do you play healthcare, Shiv? Is it hospitals? Is it through pharma companies? How do you play healthcare?
I think healthcare, the best opportunity in healthcare is through pharma companies that are serving the overseas market. As you've probably seen in over the last couple of decades, there have been 3 or 4 companies in Israel that have built very good businesses, and I think the skill set in India for that to happen is abundantly there. They've proved themselves, and the global market is focused on getting drugs at a reasonable price. I think that's one big element of what the US is trying to do, and it seems that it's the market sizes are huge, and it's an opportunity for companies in India to capitalize on. And if we look at these pharma companies, there are only 2 or 3 large big companies. I think there's a possibility over the next 5 to 10 years to have 8 or 10 very large pharma companies serving that market.
Shiv, I just want to put in a final question on the global context. I won't reiterate all the various challenges that the global economy is facing, the currency volatility, the divergence in central bank movement. But I'm curious to know how you assess the impact on liquidity flows coming into emerging markets like India. And even if on the one hand, it'll be the economy playing catch up with markets. If on the other hand, we have overwhelming liquidity flows, these markets will move substantially higher.
Yeah, I think, when you look at global liquidity, it appears to us that, wherever you see in the world, interest rates are low, and while the U.S. might raise interest rates this year, it's likely to be a very slow climb. So as a global investor, you sit and look and, your money it's very difficult to earn anything in most places. So then you look outside the U.S., let's say, and you want to try and find growth options. Well, there, if you look at some of the other emerging countries, specifically part of this famous BRIC club, those other economies are not doing very well, if at all. Some of them are degrowing, some of them are flat. So you look around the world and you say, well, where is it an economy that's even growing at 5-6% with the potential to grow higher, that's of size, it's 1.8 trillion, where you have, maybe inflation coming down, interest rates coming down, albeit slowly over a period of time, corporate growth picking up, and, valuations generally reasonable. And I think, most investors will find that, the opportunity here is still pretty strong. So I think overall we will see, investment flows into India continue for some period of time. And I think if the government does its part and corporate sector does its part, it could be quite good.
All right, Shiv, we'll leave it there. Appreciate you joining us this afternoon. Thank you very much for your insights on what you expect India's equity markets will do in the months to come. With that, we'll shift our focus back to politics.